Big news is breaking fast, and we are diving straight in. The Korean government has announced a bold, new initiative to revitalize the economy by designating 10 cities as major startup hubs by 2027. This move aims to balance regional growth by turning places like Daegu, Gwangju, and Ulsan into specialized centers for robotics, AI, and future mobility.
Your brand new iPhone deserves the best protection, and the iLune 3-Pack Screen Protector Plus 3-Pack Camera Lens Protector has you covered. Don't take risks with your iPhone. Click the link in the video description to shop now on Amazon.
Shifting gears to the markets, Korean stocks are feeling the pressure today as investors react to stalled peace talks between the United States and Iran. With tension remaining high in the Middle East, the KOSPI index dipped in early trading as major players like Samsung Electronics and Hyundai Motor saw their share prices pull back slightly. However, there is a glimmer of hope amidst the geopolitical uncertainty surrounding the Strait of Hormuz. Following a high-level announcement from President Donald Trump, Israel and Lebanon have agreed to extend their ceasefire by 3 weeks, a development that is giving markets a crucial moment to breathe while defense stocks like Hanwha Aerospace Industries climb higher. Finally, Korea has officially reached a historic milestone in medical tourism, as the Ministry of Health and Welfare confirms that foreign patient numbers topped 2 million for the first time in 2025. With a massive influx of international visitors seeking dermatology and plastic surgery, the country is cementing its status as a global health powerhouse. If you want to keep up with these fast-moving stories every single day, hit that subscribe button and ring the bell to stay in the loop. Ever feel like the entire world is crammed into a single city? In South Korea, that is not just a feeling, it is a full-blown crisis. With startup infrastructure almost exclusively glued to Seoul, talent is fleeing the regions in droves. But hold on, because the government is finally pulling the trigger on a bold new plan. By 2027, they are designating 10 cities as major startup hubs to flip the script on regional growth. Think of it as a nationwide decentralization project designed to breathe life back into the heart of the country. Here is the play. This year, they are kicking things off by naming Daejeon, Daegu, Gwangju, and Ulsan as the first 4 pioneers. By next year, 6 more cities outside the capital zone will join the ranks. Now, why does this matter? Well, Korea currently sits at number 20 for global startup competitiveness, but here is the kicker. Only 3 of their cities actually crack the top 500 list globally. Compare that to the US, which has a staggering 137, and you start to see the massive disconnect. The goal? Push 5 of these regional cities into the global top 100 by 2030. They are getting specific with it, too. Daegu is looking at robotics, Gwangju is doubling down on AI and smart energy, and Ulsan is gearing up for future mobility. It is not just empty talk. The government is promising a full suite of R&D support, regulatory sandboxes, and even preferential treatment for public procurement to keep these companies grounded outside the capital. They are even looking at turning rural areas into tourism and culture hotspots to keep the local economies humming. So, the question remains, can they truly turn these cities into the next tech powerhouses, or will Seoul's gravity just be too strong to break? If you think regional innovation is the key to a stronger future, hit that like button and let me know in the comments. Do you think a city can really be manufactured into a tech hub? Stay tuned, because the landscape of Korea is about to look very different. Ever feel like the market is just one geopolitical headline away from a nervous breakdown? Well, Seoul investors are certainly feeling it today. After a record-breaking rally that had everyone feeling invincible, the KOSPI has tapped the brakes, opening slightly lower as the reality of Middle East tensions hits home. It is a classic case of profit-taking meeting pure, unadulterated anxiety. Following a lackluster session on Wall Street, where the Dow and the tech-heavy Nasdaq both took hits, the ripple effect reached Korea almost instantly. The core issue: peace talks between the US and Iran are moving at a glacial pace, to put it mildly. While President Trump is making waves with orders to the Navy regarding the Strait of Hormuz, the situation remains a powder keg. With reports of Iran reactivating air defense systems, the market is essentially holding its breath, waiting for any sign that the Strait of Hormuz will stay open for business. Looking at the sectors, the giants are taking the biggest hits. Samsung Electronics is down 2%, and the auto sector is struggling, with Hyundai and Kia seeing meaningful pullbacks. Even the aviation sector isn't immune, with Korea Aerospace Industries suffering a sharp 7% drop. However, it is not all doom and gloom, at least not if you are looking at defense stocks. Hanwha Aerospace and LIG Defense are actually surging, reminding us that in times of geopolitical uncertainty, the defense sector often becomes the ultimate safe haven for capital. Meanwhile, the won is holding relatively steady, though slightly softer against the dollar. The big question remains, will a second round of peace talks provide the clarity investors are desperately craving, or are we in for a prolonged period of volatility? Only time will tell. If you found this breakdown helpful, hit that subscribe button and let me know in the comments. Do you think this dip is a buying opportunity or a warning sign to stay on the sidelines? Remember, in the world of finance, the only constant is change. Ever felt like the global market is just one geopolitical headline away from a total tailspin? That is exactly the vibe in Seoul today as the KOSPI hits the brakes after an incredible, record-shattering rally. Investors are hitting the pause button, and for good reason. The Middle East is keeping everyone on edge. It wasn't a great morning for the bulls. The KOSPI dipped slightly in early trading, taking cues from a choppy session on Wall Street, where both the Dow and the Nasdaq struggled to find their footing. Why the hesitation? Well, despite whispers of progress, peace talks between the US and Iran are moving at a snail's pace. We are hearing reports of Iran ramping up its air defenses, and President Trump's latest hardline stance on the Strait of Hormuz, ordering the Navy to target any mine-laying vessels, certainly hasn't calmed anyone's nerves. However, there is a glimmer of hope. Markets love certainty, or at least the prospect of it, and news that Israel and Lebanon have agreed to a 3-week ceasefire extension is providing a much-needed buffer. It is a fragile peace, but it is enough to keep analysts watching the Strait of Hormuz with bated breath. Now, let's look at who's hurting. The heavy hitters took the brunt of the damage today. Samsung Electronics, SK Hynix, and the auto giants Hyundai and Kia are all seeing red, with Korea Aerospace Industries taking a particularly sharp hit of over 7%. It is a stark reminder of how quickly tech and auto supply chains react to global instability. On the flip side, the defense sector is thriving. Hanwha Aerospace and LIG Defense are climbing, proving that when the world gets noisy, defense stocks often become the safe harbor investors flee to. Even the Korean won is struggling, slipping slightly against the dollar as the uncertainty lingers. So, what's the move? We are stuck in a waiting game, hoping the next round of diplomacy actually sticks. If you found this market breakdown helpful, hit that like button and subscribe to stay ahead of the curve. At the end of the day, markets might be driven by data, but they are built on trust, and right now, trust is in very short supply. Ever wondered why everyone is suddenly jetting off to Seoul for their skincare routine? It turns out, South Korea has officially cemented its status as the world's go-to destination for beauty and wellness. In a massive milestone, the number of foreign patients visiting Korea soared past the 2 million mark for the first time in 2025. Just 5 years ago, during the height of the pandemic, those numbers had plummeted, but the rebound has been nothing short of explosive. So, what is driving this medical tourism boom? It is a perfect storm of K-wave influence and world-class expertise. With over 2 million patients hailing from 201 different countries, it is clear that the global obsession with K-pop and Korean dramas is translating into real-world appointments. In fact, over 62% of these visitors headed straight for dermatology clinics, with plastic surgery remaining a major draw for those seeking that signature Korean glow. It is not just the neighbors showing up either. While China and Japan hold the top spots, we are seeing a massive 70% surge in American patients, hitting a record 173,000 visitors. Geographically, it is all about Seoul. Nearly 90% of these medical tourists are flocking to clinics in the capital, turning the city into a literal hotspot for global aesthetics. This isn't just a temporary trend. It is a major shift in how we approach personal health and beauty on a global scale. If you've been thinking about your next travel destination, maybe it is time to see what all the hype is about. Have you ever considered traveling abroad for a medical procedure, or is the idea still a bit too daunting? Let us know your thoughts in the comments below, and don't forget to hit subscribe for more updates on the trends shaping our world.